And joining us now, the pride of Scotland, Professor of History at Harvard University. There's Niall Ferguson, and we're grateful that you're here at TVO, because you've been on this program many times in the past, but this is the first time we've had your bum in that chair, as it were.
Pleasure to be here, Steve. I am real.
You are indeed. You said a few years ago, and here's where I want to start, that the study of modern history is simply inseparable from the study of economic history. And my suspicion is we rarely think in terms of the two of those things together. So why should we?
Well, I get a little frustrated by the way history is conventionally taught in high schools and indeed in most universities, because the economics and particularly the finance tend to get left out. And yet you can't really imagine the Renaissance without the Medici, and the Medici were bankers. You can't really imagine, to come to the 20th century, the rise of fascism without the Great Depression. And of course, the Great Depression is probably the single biggest financial crisis in all history. So my sense is, if we want to understand the historical process from the Renaissance down to the present, we need to understand some finance as well as the usual kings, queens, and dictators.
You're going to have a book on the shelves in about a month's time called The Ascent of Money. Let's go through some of the key events in recent world history, and by that I mean, I guess, over the last 100 years or so, that were caused in the main by economic as opposed to political or military shifts.
Well, I think we should begin by looking at the Great Depression, because that really was one of the turning points of modern history, the biggest economic crisis in terms of unemployment and loss of output. But it began as a banking crisis. Its origins really lay in a whole series of bank failures beginning in the late 1920s in the United States that the Federal Reserve and the US Treasury completely failed to cope with. And the consequences were, of course, much, much more than just economic. Without the Great Depression, you can't really imagine the rise of Hitler in Germany. The Great Depression transformed the politics of the United States. The New Deal was probably the single biggest expansion of the power of the federal government that happened in the past 100 years. So it seems to me anybody who wants to understand what went wrong in the 20th century, and particularly the huge upheaval of the Second World War, has to begin in 1929 with the Wall Street crash.
Obviously, a lot of people are making comparisons between that and what the United States is going through right now. Are you?
I am. It seems to me that, of course, there have been many other financial crises in the past 100 years. I mean, there's one practically every decade. It's only 10 years ago that we had long-term capital management blowing up, the great hedge fund that was taken down by a Russian default. But there aren't many financial crises on this kind of scale. In fact, I would say the Great Depression and what we're seeing now are the two big ones. The difference is that although we have the prospect of banking failures, although we have the prospect of a liquidity squeeze as serious as what happened in the late 20s and early 30s, this time around, the Federal Reserve and the US Treasury are doing everything in their power to try to prevent it, to kind of hold this crisis in check. That's why I'm calling it a great repression rather than a great depression, because we're kind of repressing this crisis. We're hoping that if we pour enough money into the financial system, it won't turn out to be as bad as the early 30s.
And do you like the odds on the Great Repression working?
We are going to be in a better place than if they had done nothing. I mean, I think if you imagine doing nothing, a continuation actually of what has happened over the past year or so. Let's not forget, this crisis didn't just start. I mean, it actually began August 2007. And in a way, up until now, everything that the Treasury has done has been ad hoc. This firm survives, this one goes down. This one survives, this one goes down. And that was never going to generate the kind of recovery of confidence within the banking system that was needed. So this is, it seems to me, at least a step in the right direction. But it's far from clear that it's going to cause this crisis suddenly to disappear. In fact, it almost certainly would. We have a pre-programmed recession in the American system now. It's going to happen last quarter of this year, much of next year. We're going to see real decline in economic activity because the credit crunch has already happened and firms are already cutting back on hiring. So what will happen next is far from clear. At one level, the great crisis has been held in check, but I don't think we're going to escape quite a nasty crisis just the same.
Let me go off on a little tangent here. It's a great tenet of Western society, of course, that people become homeowners. Do you think the subprime crisis suggests that we have pursued this, those who have been in a position to pursue this have done so to great detriment and without thinking through all of the consequences?
Well, Steve, I think you're right to say we, because this is far from just confined to the United States. It's been true throughout the Anglosphere, and indeed in other countries too. Spain, for example, has seen an enormous expansion of home ownership and a bubble in real estate values that has now deflated. I think the inspiration behind all of this can be traced back to the 1930s. It was in the 30s that the institutions were put in place to take the proportion of households that owned their own home up above 50%. Remember, for most of history, only a minority of people owned property. Most people were tenants. Go back 100 years. It was the minority who were the landlords and the majority who were the tenants. Well, from the 30s, that began to flip. And by the time you get to the 1950s, particularly in North America, the assumption is that the majority will have a mortgage and own their own home. And we've kept pushing that percentage upwards, 50, 60, 70%. And I think it was the point where we went from, say, the late 60s up into the sort of mid 70% that things began to go wrong, because the subprime crisis is in large measure a story of persuading people who really couldn't afford to have mortgages to take them on.
But it's still, would you say it's still a good idea to have as much of society as possible owning its own home?
I'm rather skeptical about that,
really?
Actually. But this is a long-standing argument between me and my wife, who loves the idea of owning property, whereas I'm really one of life's shiftless tenants who would rather have somebody else fix the drains when they get blocked. There is actually a problem with home ownership. You're encouraging everybody to take one big leveraged play on one market, the real estate market, take on a lot of debt to do that, and have most of their wealth held in that form. But houses are not like stocks. They're quite hard to unload in a crisis. They're illiquid assets. And from that point of view, I'm not sure it's absolutely wise for us all to be in this market. After all, one of the primary theories of modern finance is that you need to be diversified. Well, how many of us are diversified? Most of us just have one big lumpy investment financed with one big loan. And when that market, the real estate market, turns down, the pain is really intense. And I think we're only seeing the first phase of this pain at the moment.
Let me ask you a bit about the journalism you're seeing around this. Journalism, of course, being the first draft of history, as conventional wisdom suggests. In keeping with that, do you think most journalists understand that which is going on around us these days?
Well, a good test is to see if somebody can explain what a collateralized debt obligation is, or a credit default swap, or what the difference is between a CDO and a CDS. This is technical stuff, and it's actually pretty difficult to explain to a lay reader or lay viewer what these things do. And as for the whole complex of derivatives, quite apart from credit default swaps, it really is an extremely technical subject. And yet if you don't understand that stuff, you can't possibly explain why a subprime mortgage crisis in the United States would cause banks to fail in Britain, in Belgium, and who knows where they will fail next. So this is difficult stuff, and I have to say that it's doubtful that most journalists writing about it really do understand all the technicalities. Mind you, it's doubtful that most of the bankers who made these instruments understood them either. So this is in the land of the blind, the one-eyed man is king. My attempt in The Ascent of Money is to explain these things so that a non-economist, a non-banker can understand it. And my starting point is simple. If you know where things come from, where they originated, whether it's central banks or, for that matter, money itself, then you'll have a better idea of how they work.
I saw President Bill Clinton trying to explain this to David Letterman on his show the other night, and at the end of his explanation, which was not bad actually, what a derivative is, Letterman just put his face in his hands and said, "My head hurts now, I can't keep up." Yeah. I suspect there's a lot of that out there, don't you think?
Yes, I must say one of the hardest things I have done in recent years was a piece to camera for a television series. The Ascent of Money is accompanied by a series for PBS in which I tried to explain how options worked. And once you get into puts and calls, and then do the equation which allows you to price an option, which is really rocket science, then I think most people are going to be, if not lost, then a little confused.
I think my head's starting to hurt, so let's move on here. Some people are interpreting the current crisis as a watershed moment where the balance of financial power is shifting from the United States to, for example, emerging powers or China, for example. You want to go there?
Well, it's certainly plausible. I wrote a book back in 2001 which explored this possibility of the cash nexus. And then I wrote a book called Colossus, The Rise and Fall of the American Empire, which ended by arguing that America's indebtedness was going to prove its great vulnerability. And that was published 4 years ago now. Well, it turns out that indebtedness was indeed the problem. The question is whether this crisis necessarily strengthens others as it weakens the United States. And here I think we need to be careful. It's certainly true that this is as nasty a financial crisis as the United States has had to cope with since the Depression. But the United States has a record of bouncing back from financial crises.
That's what Clinton said. Clinton said people have been betting against the U.S. for 200 years and losing every time.
And even the Great Depression, although it was devastating at the time, 10 years later, you saw the United States, the biggest economy in the world, the key factor in World War II. And I think we have to prepare for this sort of thing to happen again. The United States will deal with this problem more rapidly than, say, Europe. it will bounce back more rapidly than, say, Japan. And it's far from clear that even China, which we all see as the great powerhouse of the future, can walk away from this global crisis unscathed. The United States is good at exporting things. It's good at exporting The Simpsons. It's good at exporting a whole bunch of stuff. It's also good at exporting crises. And right now, if you look at the world economy, although things are tough in the United States, the stock markets that are really down are India's, China's, and Russia's. And I think that tells you something important about what's going on here.
Well, the conventional wisdom, again, is that when the United States catches a cold, the rest of the world gets pneumonia, particularly those of us here in Canada who rely on the U.S. so much. But now some are saying that there is more decoupling of economies from the U.S. to the rest of the world, and therefore the rest of the world shouldn't suffer necessarily as great a shock as the U.S. is suffering. What's your view?
I find that word decoupling slightly obscene sounding, as if it's what you do when the cops come in and you're with your mistress. But I mean, it seems to me unlikely that China is somehow going to be able to carry on growing at 8, 9, 10% per annum if the United States, which is more than a quarter of the world economy, is in recession. I mean, that's a stretch. Now, of course, the Chinese are unlikely to go into negative growth, but I think they will see their growth rate decline significantly. Yes, they're less reliant than they used to be on exports, but it seems to me they still can't be completely insulated from a crisis on this scale. And the same goes for all the other Asian economies with which the Chinese trade. So my sense is that we'll see something of a slowdown there. And remember, other political systems, whether it's China's or Russia's for that matter, are less well able to cope with this kind of economic shock. In the Depression, which was extremely vicious economically, the most radical thing that emerged was the New Deal, whereas the Depression in Germany, which was just as bad in the 1930s, produced Hitler. Other systems cope less well, and I'm very struck by the fact that in this very political presidential year, the moderation of the candidates' language on this point and how we deal with the crisis is actually the most striking thing.
So if it's, as Mr. Clinton said, a bad idea to bet against the United States, what does the United States at this juncture of its history still have going for it, which would make you not want to bet against them getting out of this?
Well, it still has the reputation of safe haven. If you're really worried about your money, what's your default setting? Well, you put it into US treasuries. And that certainly helps the Americans finance this bailout. I mean, if you want to find $700 billion, you issue those treasuries, people buy them up, and it doesn't cost you too much. So that's one advantage. But perhaps a more important advantage, Steve, is that this is still a country which produces more innovation and more entrepreneurship than anywhere else. It still has the biggest concentration of academic firepower in its universities. If you think back to the 1970s, which was also a pretty dire time economically for the United States, things were terrible, stagflation, you name it. And yet that was the decade which saw Bill Gates found Microsoft, Steve Jobs found Apple. Innovation never stops. It didn't stop in the 30s either. So the United States will weather this financial storm the way it has in the past by innovating and producing the next generation of globally dominant businesses.
There are other countries in the world, and I think Russia and China at the top of the list, that are showing that you can be awfully economically dynamic and very authoritarian at the same time. And I wonder whether you have come to any different conclusions about whether democracies are really the best form of government in which to achieve some of the kind of economic progress people want nowadays.
Well, this is a very complex relationship, the relationship between democracy and capitalism. It's a kind of double helix of modernity. It's hard to believe that a system like China's can be stable over the long run if it systematically limits political representation. And the problem about one-party states is very simple. They're corrupt. It's extremely, very, very difficult to challenge the authorities, because how do you do it? I mean, the only way you can challenge the authorities in China today is to take to the streets. And then, we know this because it happens all the time, along come the police and break a few heads and off you go to a labor camp. Now, that is not a system which over the long run has succeeded historically. The systems that have done better historically have been the ones that have given voice to people, where there have been representative institutions, where there's been a plurality of institutions, no one institution monopolizing power.
But in the short run, it works pretty well.
It can work very well in the short run, but then it worked very well in the short run in the Soviet Union. If you had gone to Russia in the 1930s, during the Depression, you'd have said, I've seen the future and it works, as many fellow travelers did. They saw incredible feats of construction being achieved by Stalin and his people. And they came back full of a sense that this was the next phase. But it wasn't. In fact, this was based on coercion, on terror, and of course on environmental degradation, which is one consequence of having breakneck industrialization without private property rights and without a legal system that protects individuals. So although you can go very, very fast for maybe 10 years, maybe even 20 years on this model, sooner or later the wheels always come off. Sooner or later, the more representative systems, where individual rights are respected, come out ahead. And I'm sure that will be the case in this century as it was in the last one.
You're sticking with democracy.
I surely am. I mean, it's the best of all possible systems, as Churchill said.
I thought he said it was the worst of all systems, save and except for everything else.
Apart from all the others that had been tried, which is another way of saying the
Right
best.
on. Professor Ferguson, always good of you to join us here in TVO, particularly to see you in person this time. Thanks so much.
It's been a pleasure.